If you own your own business or you're self-employed, you're probably wondering how difficult is it to get a mortgage. I'm Mike Smith with Homestar Financial, and today I'm going to be talking about loan options and requirements if you are self-employed. Traditional W-2 earners are generally able to qualify for a home loan by simply providing copies of the W-2s and their tax returns and verify that they have a job. But when you own your own business or you're self-employed, things become a little more complicated. And in this video, I'm going to break down some of the general requirements in place for self-employed borrowers to qualify for a home loan. You want to check with your lender to find out more specific loan programs that they may have available. But as a general rule, let's dive in and look at what you will need. First, we're going to begin with the most important rule, and this is verification of how long you've been self-employed. Most lenders and loan programs require that you've been self-employed in your current business for a minimum of 2 years. If you meet the self-employment history requirement, the next thing that your lender is going to ask is for 2 years of income documentation. Now, this typically means 2 years of tax returns, and this is where most self-employed borrowers throw up their hands and say, I don't have 2 years of tax returns, or I don't have a lot of income to show on my tax returns. There are many loan programs available today that will verify your income based off of your bank statements, so don't throw in the towel yet. When a mortgage lender is looking at your self-employment income, they're generally looking for 3 things. Number 1, that the income is stable. Number 2, that it's consistent. And number 3, that it's ongoing. This means that there's all sorts of self-employment income that's eligible. You could be a business owner. Maybe you have freelance income, or you do contract work, even seasonal work. Gig work, side jobs, if you're a musician. These are all types of income that could be considered on their own or as additional funds on top of your primary income source. Lenders will sometimes even count unemployment income for contract or seasonal workers with regular documentation of history receiving unemployment in the off-season. For any source of income, a lender must determine if it's going to be ongoing. Generally, this means that the income seems likely to continue for at least 3 years after closing. A history of declining income will not improve your chances with a mortgage lender. For self-employed borrowers, a lender may conduct a review of the borrower's business to determine its stability and the likelihood that the income will continue at the same level. Now, if you're in a declining industry, such as a hotel owner during the coronavirus pandemic or a builder during a housing crash, this could pose a problem with your approval. Underwriters use somewhat complicated formula to come up with qualifying income for self-employed borrowers. They start with your taxable income and then add back certain deductions like depreciation, since that's not an actual expense that comes out of your bank account. Business owners and other self-employed workers often take as many deductions as they can. While this can save you a lot of money during tax time, it can also hurt you when you're trying to get a mortgage. There are many new bank statement loan programs that are available today. These programs are often called non-qualified or non-QM mortgages. This means that they lack some of the consumer protections of major loan programs, and they usually do have higher interest rates. So, how will your lender document your income? In most cases, self-employed borrowers are going to need to provide the following documents to prove their income to the mortgage lender. Number 1, you're going to need 2 years of your personal tax returns. You'll also need 2 years of your business tax returns. That's going to include schedules K1, 1120, and 1120S. You'll need a copy of your business license and your year-to-date profit and loss statements. You'll need your balance sheet. Also, a signed CPA letter stating that you're still in business. If the business is a sole proprietorship, in other words, not a partnership, a corporation, or an S corporation, you may not have to provide business tax returns. Also, if you've been self-employed but at the same business for 5 years or more, you may only have to provide 1 year of business and/or individual tax returns instead of 2. Now, if your income is not regular, and reliable, lenders generally won't count it. However, many businesses go through ups and downs. You should be prepared to explain any significant year-over-year decreases in your income when you apply for a mortgage. You don't have to own your own business to be considered self-employed. A lender will likely consider you self-employed if you own 25% or more of a business and you don't receive a W-2. Now remember, you're not required to report self-employed income under Fannie Mae and Freddie Mac's lending rules. If you have a freelance job or a small business on the side and you don't need that income to qualify for your mortgage, your lender can ignore it on the application. You may be wondering if you can get a joint mortgage if one person is self-employed. Maybe you want to apply with a spouse or a co-borrower, but one of you is self-employed and the other is traditionally employed. Most mortgage lenders will be fine with this, provided that the self-employment income meets the guidelines I discussed earlier. You also have the option not to count your co-borrower's income source if you wish. If you qualify for a loan with your own income and your co-borrower is self-employed, your lender can ignore that business in underwriting. Why would you want them to ignore that business? Because many small ventures or even large startups don't show income on your tax returns. At least on paper, they generate losses. While these business write-offs are great for reducing taxes, they can reduce your qualifying income when you apply for home financing. If you're self-employed and you want to buy a home, it helps to plan in advance. Work with a mortgage professional and involve your accountant as well. Self-employed borrowers have access to the same mortgage programs and the same low rates as other borrowers in today's market. So be sure to work with a lender who has loan program options for self-employed borrowers. If you are self-employed and you're looking to buy a home, I would be glad to help you out. Give me a call. My number is 865-378-7141. Once again, this is Mike Smith with Homestar Financial. Thanks for watching.